Hey guys, Mike Hamilton here from Hamilton Insurance and Financial Management. I'm just here to talk to you a little bit about the budget changes that have been proposed for the 2015 budget. I'm sure you've heard there's stuff out in the media right now about RRIFs and tax-free savings accounts, and I just want to give you a little bit better of an understanding so that we can work together and use these to our advantage. So the biggest piece of news that we've heard of is the tax-free savings account limit has increased to $10,000 for this year, which means it's also going to be backdated to January 1st of 2015. So maybe you put $5,500 into your tax-free savings account this year, which was the max for the year before. You're going to have an extra $4,500 that you can put into it by the end of this calendar year, which means your total amount for tax-free savings account is increased to $41,000 from $36,500. So that's a really interesting thing that we're really going to be able to use the tax-free savings account in the future for more than just liquid savings. It'll be more of a alongside the RSP or something like that. I don't know if you saw my blog post yesterday, but you basically have to use them both in tandem. And the tax-free savings account now, if it's going to have more contribution limit, it's going to be a really great thing. The next thing that's happened is for our retired clients or people that are approaching retirement, the government has proposed that we drop the RRIF, which is Registered Retirement Income Fund, for those of you who don't know. We dropped the RRIF minimum, so in the RRIF, you have to take out a minimum every year that you're retired after age 71. So the minimum that we currently have is 7.38%. And what they've done is they've dropped that to 5.28%. So, for example, on $500,000, that means we're basically going to need, or we're going to have to take out $26,400 every year, and that actually increases. The minimum increases every year until the age of 95. However, so 5.28% is $26,400 of $500,000, and the current rate right now, which is 7.38%, would mean that somebody with $500,000 would have to be taking out $36,500. So it's almost $10,000. It's just a little over $10,000 actually for the very first year, and that's fantastic for people who maybe didn't have enough savings going into retirement. It adds some longevity to it, and I think that's great for our clients who are getting closer to retirement. It gives you a better idea, and then with the tax-free savings account, basically you take the minimum from your RRIF and then use the tax-free savings account to supplement your income so that you can have the least amount of taxable income possible, which would be the $26,400. Another interesting thing that they brought out is something called the Home Accessibility Tax Credit. So if you are disabled or you have a family member who's disabled, you can claim up to 15% of a $10,000 a renovation that you had to do for accessibility reasons, like putting a ramp on your home or a chairlift or something like that. And so the government's willing to give you a tax credit of 15% of up to basically $1,500. Last and not least, for my small business owner clients and our small business owner clients, it's really interesting that they've also introduced the drop in the tax rate for small businesses under $500,000 of income. So currently, right now, if you're earning less than $500,000 of income and you're an incorporated business, you're being taxed at 15%. So over the next 4 years, what they're going to do is they're going to drop that to 9% by 2% every year. So that's a really interesting thing. It's good for small businesses who are just starting out and they've incorporated and they don't have that income generated, and it's nice to only have to pay 9% tax over the 15% tax, which is already good. So those are a few things that are coming out in Budget 2015. I just wanted to give you some understanding on it, and if you have any questions, feel free to send us an email or leave a comment on the bottom of this YouTube video, and we can go from there. All right, thanks a lot, and Mike Hamilton, solid advice for generations.